Roland, I think I'd maybe start off with you. Maybe if you could just, introduce yourself a bit more formally and describe your role and obviously HSBC's tech business in the UK.
Yeah, good morning. Thank you. Thanks for having me. I'm delighted to. So I think I have one of the best jobs, if not the best job in HSBC. So I work for HSBC UK. I head our technology sector from a client coverage perspective. So that means I'm responsible for the 66,251 tech firms that we bank in the UK. It's quite hard to define that, but that's as of SIC codes at the end of December. I'm very lucky, very privileged. I've spoken to over 400 CEOs of tech firms since COVID hit, and I've got quite a good view on what's going on in the market. And that's everything from very early stage startups through privately owned, private equity backed, and then to some of our largest UK and international firms. I'm incredibly positive about how the tech economy has ridden the COVID wave, how we've supported people transition to remote working, and I'm very positive on the future. So we've done a huge amount to support our clients through COVID with all the government schemes, and we've also and continue to support people very much on their growth agendas.
Do you sense, in terms of the relatively early stage entrepreneurs that you work with, that there has been a bit of a hiatus? There has been a lot of discussion about very early stage and certainly pre-growth stage companies having difficulty. Prior to lockdown, they may have had term sheets, but post-lockdown, they weren't really able to get funding away. And investors were very much favouring later stage companies. Is that your experience?
It's just funny, that's the second time somebody's asked me that question in 2 days, and I'll try and give a similar answer that I gave yesterday. We definitely saw a bit of a hiatus in early summer, and I think everybody was trying to work out what the world looked like in a post-COVID or during COVID world. And I don't think that was just purely related to funding. That was more systemic. Every firm, from the largest firm to the smallest firm, was trying to work out what does the world look like, and how do I need to pivot from looking backwards, because the stuff that's got me here may not get me there in the future, to looking forwards. And I think the VC community and the angel community was in the same place. But I mean, I've also then gone on to see stats that said Q4 was the busiest quarter ever for UK investment from VCs into early stage businesses. And the total number and the total value of invested transactions last year was very similar to the year before. And there's an expectation there's a very strong pipeline coming through. I mean, one of the other kind of views is we are in a period of economic tightening, and there's an expectation that there'll be a lot of people who've been unfortunately displaced through those changes that will then go on to start their own businesses. So maybe we're going into a purple patch of investment going forward. So I don't think the world is entirely rosy, but I don't think the world is bleak either.
Do you sense, though, that the companies that have been able to sustain themselves and have been successful through this period have been the ones that have kind of ridden on the back of the COVID emergency, that are, offering collaborative tools or integration of collaborative technologies, or, not so much providing innovative, new solutions?
Yeah, so let me try and answer that and give you a couple of stats. So we've done a couple of surveys during COVID, one a global survey of about 39,000 firms across 15 markets, and another survey we did purely of UK tech firms. So I'll come back a couple of bits of data points on that in a second. But if you look at, I think it's probably not specific on the product or the service that the firm delivers. I think it's about how quickly they pivoted and how quickly they reacted. So a couple of bits of data points as I promised. So over 80% of people that responded to both of those surveys feel closer to their customers, suppliers and staff. I think the stats were 82, 83, 81. Than they felt pre-COVID. I think that's a really important perspective. 66% of people feel that they're more productive now than they were. And this is across kind of the entire economy, including tech. I was really surprised to see the tech results the same as across the entire economy. And then if you look at investment, which is kind of the third arm of that, 52% of people plan to launch new products. And that stat came from July. So that goes back to that. We're working out what the lie of the land looks like, and then people are kicking on from there. So I don't want to bombard you with too many stats, but hopefully that gives you some sort of data points on the sort of stuff that we're hearing from our client base.
So thanks for that, Roland. Ben, what's your experience? Maybe first of all, just describe the type of projects that you get involved in and the type of companies you work with, but more generally, what your experience has been over the last year.
Yeah, hi, I'm Ben, and I'm with the European Institute for Innovation and Technology, and we have a pan-European accelerator. We have 11 offices around Europe, and in each office we have business developers, and their job is to help Europe's most promising digital technology companies grow across Europe by opening doors to customers and partners. And then we have a venture finance team, which I'm part of, and our job is to help our supported companies with Series A and Series B financings. So I meet a lot of entrepreneurs, venture stage businesses, and at the same time, I'm in contact with venture capital investors all over Europe. So I have a pretty good gauge on activity at the venture stage of venture stage businesses. This year, it's been good news and it's been bad news. The good news is there has probably never been more venture capital available for early stage businesses. It's been magnificent. The funds have been growing. It hasn't just started during this year, but over the last 4 or 5 years, more and more venture capital funds have been launched. More institutional investors are putting their money into venture capital. A couple of reasons for that. Lots of exciting technology opportunities for digital transformation. And I think interest rates have something to do with it as well. The big investors are looking for more return, and they see venture capital as a route to get yield. So that's great news. There's lots of money available, but in another way, it's been very tough. For a few reasons. There's a lot of startup companies looking to raise money, so it's very, very competitive. Fundraising is tough. The companies need as much help as they possibly can to attract investors, show that they're special. Investors at the same time are very, very picky as a result of there being a lot of deal flow available in the marketplace. And then COVID has made things, the first 3-6 months of the COVID panic, as Roland was saying, nobody had any visibility. Things in many cases just shut and stopped. Even for great digital tech businesses that weren't even affected by COVID, things really slowed down a lot. But there's been a quite a magnificent pickup in the last 6 months, I'd say. Mm-hmm. VCs are back. They're not just talking to companies. Their talks are advancing. The companies are getting term sheets. Deals are being done over Zoom, which is quite remarkable. Mm-hmm. That being said, VCs still like to meet companies eye to eye. And that's really tough, especially when we're doing cross-European deals. UK investors still want to try and meet Finnish companies face-to-face. And it's awfully tough to get a flight to Helsinki these days.
Yeah. So it was my very last business trip before lockdown, and getting there is hellish.
It was awful. So that's a bit of a hurdle. But everybody's kind of working around it, accepting what's happening, and deals are getting done. And it's in my view, it's quite remarkable, the change in the mindset, the ability for investors to make decisions over Zoom. It's really something. Yeah.
Ben, I'd be curious to know what kind of business propositions, what focuses are really attracting the interest of the VCs. The market seems to be bifurcating a wee bit. There's a lot of interest. I have detected a huge amount of interest in sort of decentralized solutions and distributed ledger technologies as the enabling tech behind a lot of solutions. And then, of course, you've got the let's make some money out of mayhem kind of solutions as well. What do you think are getting term sheets?
Oh, I mean, there's been a kind of an explosion in deals in opportunities that are taking advantage of this new change in the market environment. People spending more time at home, kids spending more time at home. So I'm thinking about anything to do with remote communications. Is booming. New ed tech technologies to enable kids to learn at home, or new ways of learning outside of schools. Lots of people are ordering via Amazon. They're ordering their goods home. So all kinds of deals being done in supply chain, particularly in the last mile. How do we get products to people's homes as efficiently as possible? more people are on their computers. More businesses are spending time on Zoom, etc. So cybersecurity is a massive issue. So lots of interest in advanced cybersecurity. Artificial intelligence, it's been growing and expanding for many years now, but there's been an explosion in that area as well. It's an exciting time in technology.
Yeah. No, and it's great to hear as well that that innovation is still happening. And my final question, I'll leave you alone for a while and go to Davey next. But just finally, the countries, the markets across Europe that are thriving and doing better, how does the UK stack up against some of the other European markets in terms of some of this activity?
It's probably the best. It's probably the most active market. I mean, it is the most active market. I mean, the number of deals being done here is greater. And the size of the deals is much larger. That's something we should get to. I mean, it's interesting what's been happening over recent years with the influx of money into venture capital. The funds are getting bigger, and as a consequence, they're focusing more on later stage ventures. Mm-hmm. So it's interesting what's happening at the seed stage. I wouldn't say that investment is falling at the seed stage, but it's not growing as quickly as it is at the later stage, Series A, Series B round levels. Yeah.
Interesting. Yeah, that's anecdotally what I've heard as well. Davey, you're typically in the middle of all of this, kind of representing both supply side and or buy side and sell side, in effect, as the legal team. Behind a lot of these deals. What's your experience been? And again, just in relation to that last question to Ben, what are the hot segments of the marketplace that you're seeing?
Thanks, Jeff. So I'm lucky and a bit like Roland, really, although not quite as big an operation. But I sort of co-chair the firm's global tech group, which is great because it gives me quite a decent bird's eye view, if you like, and what's happening around the world and various offices across technology. And just as a general point, I would make, I mean, I think, being honest, we're still sort of pinching ourselves at what 2020 became in terms of the tech sector. I know for a fact, but mid-March, I was staring into my cornflakes, rather depressed by what was maybe ahead of us. And by the time we got to sort of Q4 of the calendar year, our revenues, and I mention this because it's relevant to demonstrate, but our revenues just in tech alone were up 25% globally as a firm. Now, I think up to about the end of August, it was pretty quiet. I think we all had a bit of time over the summer to sort of enjoy at least the sunshine and, if you can say, enjoy with lockdown involved. But when we got into September, things really started to shift, and the M&A activity went berserk. VC, PE activity, the capital markets started to move again. And that period from September round, well, I say to now, we're still going gangbusters, has seen an incredible move forward across various subsectors of technology, which has been absolutely fantastic for everyone involved. In terms of the key areas, we've seen a lot, and you won't be surprised by this, e-commerce, especially e-commerce around areas where people have perhaps needed a little bit of a boost in lockdown. So I've done some deals in the plant space where house plants, an e-commerce platform that delivers to houses, gives everyone a bit of a lift. It's extraordinary what really goes in the times that we're in. AI has been huge. The cyberspace has been and continues to move forward at pace. And then fintech. I mean, quite frankly, and we would say this, but London is just absolutely leading the field globally in fintech. So the number of companies that we've had coming through over the last, I'd say, 6 months from Australia, the US, Canada, and we'll come on to that perhaps a bit later about where those companies are coming from. But even with the big bad B word and Brexit, it hasn't put people off. And the UK, I have to be careful, obviously it all doesn't revolve around London, but the UK has very much still being seen as the place where you come to land, and then you can spring, a slightly different springboard clearly, into Europe these days, but it's still a springboard that people are willing to use. So I have to be honest, I'm like Roland and Ben, I'm incredibly positive about the way things have been, and 2021 looks like it's going to be a good year as well.
Now, one of the consequences of lockdown was travel curtailment, and certainly in fact, I interviewed just a couple of days ago an FDI, an investor into the United Kingdom from Denver, called Knuth from Pax8, and his frustration was his inability to travel, and it was having a big impact in terms of they made an acquisition, for example, during the first lockdown, and just being able to integrate the new team into the company was really problematic, in terms of not being able to meet and eyeball people. And also, now that he's landed in the United Kingdom, hiring staff. What's your reactions in terms of the continuance of the travel curtailment? Is that going to be problematic in terms of being able to do the operational side of business, Ben?
Yeah, I think it's going to be a problem. I mean, business is about relationships, and it's more difficult to build a relationship over Zoom than it is face to face. Companies that I know of, doing closing sales deals, it's more difficult. It can be done, but they're telling me that it's just not as fast in many cases. It's taking time, and then on the fundraisings and the investment, it's a bit of a barrier still. Yeah, I'm looking forward to the time when we can start flying again. I don't miss traveling that much, but I think it's really, really important to be able to get on a plane and meet people. Put people together in one room, deals get done faster. Everybody ends up getting to know each other better, and relationships are stronger. So I'm looking forward to getting back on planes.
Yeah, it's I would agree with you wholeheartedly, Roland. In terms of FDI, there's a big potential impact of the travel curtailment on FDI. Certainly in terms of we used to see a huge, well-trodden path. It's an awful analogy given the distances involved, but from Australia, New Zealand to the United Kingdom, in terms of, relatively early stage companies that have maxed out the indigenous funding markets in Australia, New Zealand, tramping to the United Kingdom and setting up operations and really availing of what, relatively speaking, was a hugely important market and big market compared to the Antipodes. Do you think the travel curtailment has had an obvious impact on FDI?
I think time will only tell, because I think this is one of these things that there tends to be a bit of a lag between the first conversations, the toes in the water, the first visits, and something more concrete coming out of it. I definitely think the world has changed, and I definitely think we're in a world where hybrid working is going to become the norm, with a lot of stuff done virtually, and there needs to be human interaction. I mean, we've done a lot of work with the likes of UKTI. We work with Silicon Valley comes to the UK in terms of sort of the US market, and we're doing a lot of work with the pivot to Asia that's going on, with people from Asia investing in UK and Europe and the US, and vice versa the other way around. We're still seeing a huge amount of interest, and I think people are just learning to do stuff differently. I don't have a good enough view on what it's converting into sales or investments, because I don't think we've got there yet. But I'm not seeing any change in desire. I'm still seeing a huge amount of businesses talking about, okay, we're wanting to go more international, whether that's into the UK or out of the UK, and that desire still seems to be there. But one of the things that people seem to be testing a little bit more is, okay, why is the desire to do that, whether it's in or outbound? Am I doing it just because it feels like what my investor tells me that I have to do? Or am I doing it because I've already exhausted the market in my country, so I need to go and look somewhere else? And I think there is a bit more navel gazing before that happens, if that makes sense.
Yeah, I think you're right. I think it could be a good sign, that there is pent up demand, and of course that might result in a bigger upsweep in terms of the the recovery. Davy, what's your experience? I know that you do and have done quite a lot of work in particularly North America, and also with quite a lot of Australia, New Zealand companies and European companies as well. What's your experience been in terms of FDI?
Yeah, so similar to what I said before, the start of the year 2020, things slowed dramatically. So, the sort of daily calls or emails from companies outside the UK really dropped off to nothing, quite frankly. I'd say from about November onwards, that started to move forward and change. So especially the last sort of 2 to 3 months, we've seen a big uptick in inquiries coming through, especially the US again, which is great for us. I mean, we get a lot of our work from that part of the world, and we've seen a lot of uptick there. Australia has come on song again in terms of looking into the UK. So over the last 2 weeks alone, I've had about 2 or 3 calls with tech companies there looking to come to the UK. A lot of those calls tend to be around the regulatory environment, which will not surprise you. So, fintechs, for example, wanting to understand more about what the requirements might be for maybe payment services or the banking scenarios. So, those instructions are coming in and sort of into a regulatory team to begin with a view to perhaps giving advice on the art of the possible to then hopefully, get the incorporations and move them forward. So it's literally only been, I have to be honest, the last 3 or 4 months, we've started to see that coming back on song, which is very, very promising and very positive. And Canada actually as well, I should say, especially I'd say more than the US at the minute, has really been pushing forward in terms of, looking to the UK as the place where they want to move to next. So I think, it's only up is what I'd say.
Ben, in terms of the accelerator or the incubator stroke accelerator network in the United Kingdom and in other European markets, first of all, how does the UK compare in terms of providing support to growth stage companies, and could it be doing better, and are there kind of exemplars that you readily spring to mind, probably your own, spring to mind in terms of how it should be done and the type of support that's needed? Because I've worked with so many highly innovative, technically driven, brilliant people who do things that I could never do, but who are horrendous communicators and have no first knowledge of business, and have articulating their product concepts is truly woeful. Surely the accelerators should be providing some of that expertise to support them.
I think they do, actually. We have a really strong network of accelerators and incubators here in the UK. They're probably some of the best in the world. If you actually look at the companies that are successfully growing and raising money, most of them have been through some kind of incubator accelerator program, where they've built their business model, crafted their value proposition, developed all their key messages that resonate with customers and investors. I think the accelerators actually do a very good job, and I think they're a needed part of the technology ecosystem, because, as you say, a lot of these clever people are in the lab or in the garage, and they don't have a lot of experience selling and getting out to the marketplace. So, and there's a really strong network of support here in the UK that can help them learn how to do that, and can introduce them to potential partners and customers and investors. It's actually pretty impressive what the work that's being done and the support that's being offered to founders and startup CEOs. And
Innovate UK plays a strong part as well in terms of providing some funding, for research and development activities. But also there are a number of other programs, including some special programs that were introduced specifically in terms of COVID response. Can you make comment on the kind of support programs that are available from the government and how useful they are?
Well, the one that I'm most familiar with is the Future Fund, which is the government's dedicated investment fund to go into startup and venture stage businesses. It was built very, very quickly, and I think it was launched in May. Sorry?
I think it shows.
Yeah. I mean, there's all kinds of wrinkles there and all kinds of problems, but I think the priority was to get it up and running as fast as possible.
Yeah.
We can look at it and go, oh my goodness, why did they do this or that? But they built it, and it's as I think the last news I read is that there's 1.1 billion in government funding. It's the government's investing through convertible notes, so that must be matched by private investors, reputable venture capital firms, and those convertible note those loans can be converted into equity at the next fundraising, at the negotiated valuation. It's a little bit early to tell, what the impact of that funding has been. It was my understanding. I think what's interesting is it was my understanding is the fund was designed to support companies that were hampered by COVID-19, and I'm not entirely convinced that the money actually got to the companies that were hurt most by the lockdowns. The program has really been led by the venture capital funds, and they've been really calling the shots on where the funding is going. And it'll be interesting to see whether or not the money has been going to companies that have been hurt by COVID-19, or if it's been going into ventures that are in venture capital investors' portportfolios that are already strong and they want to make stronger. So that's something that we'll need to see what happens.
Yeah, Davey, I read a report when Future Fund was launched. Seed Legals, published a blog post saying that the terms were just truly awful. That that it was kind of rape and pillage essentially. I paraphrase. I didn't say that exactly, but certainly the terms were worse than some of the most draconian distress funds that are available. Was that the perception in the marketplace? Because it seems not, given the huge amount of take-up, or does that indicate a huge amount of distress?
Well, there's a couple of ways to look at this. I mean, we looked at this at the beginning when it first came out. We had a few inquiries on it, and we sort of did a bit of kicking of the tires. It's actually quite a complicated process. It is led by the VCs. Ben is correct in that. But actually, you have to have a law firm involved, because the money has to be sent to a law firm from the government to actually affect the loan or affect the transaction. Now, I had a look through the terms at the time, and if you were a startup, assuming the money, of course, was being used in the right way, and you wanted to take advantage of it, you really needed support from a law firm, because even wading through the terms and conditions was quite a difficult task. Also, the way it was structured at the time, and well, at the time, as it still is, but they had a conversion discount rate which had to be at least 20%. So the way it was set up was that you could have certain points that could be negotiated, because obviously, as Ben said, you had to have a private investor coming alongside. But the conversion discount rate had to be at least 20%. The loan interest rate had to be at least 8%. I mean, that's high. There was an optional evaluation cap on the conversion, which was set by the private investors, which again, as you can imagine, where that could get to. So really, whilst we've got over £1 billion has been lent, a lot of the companies that were taking that on, I do question, do they know what they've signed up to? Because I think the trouble with these types of things is, desperation leads people to make decisions that perhaps they haven't had adequate advice on. It may well be it's a great shock to them when they realize what the terms actually end up being whenever this all plays through. It's too early yet, because we're obviously still in the early stages of it. It's great that there was something there. I just hope that the companies that have taken advantage of it, it's actually something that in the long run they don't regret.
Yeah, I would agree, and it's a classic instance of, regardless of who's providing the funds, ultimately, it's managed through the British Business Bank, but you just do need to make sure that it suits your particular needs. Roland, maybe we could have a final conversation around funding more generally. And also what's coming next in terms of markets opening again, and after this lockdown, and what the new world is going to look like as well. Where do you sense the markets are moving? What type of businesses do you think might define some of the conversations that you're going to be having once we finally get out of this crazy period and we start doing proper business again?
Yeah. Okay. Can I have an easier question? Let me try and share some views on that. There's a huge amount, as we've already touched on, there's a huge amount of money chasing tech assets, whether that's in the public market, private equity, or venture capital. We're seeing a lot of focus at the moment in areas like Internet of Things, the whole contact-free or no-touch economy, and that sort of links back into smart buildings and the environmental and sustainability agenda there. We're seeing a huge amount of focus on cyber and security, very, very strong valuations. Areas like managed services continue to be very strong. You talked earlier on about some of the collaboration tools. Those areas are very strong. Funnily enough, things like managed print services and paper-related, people aren't that interested in. People aren't printing. I don't know about you guys. We've all learned to mark up documents on screen. Lawyers used to be notorious for printing things off and taking pens to them. I don't think anybody does that anymore. I can't remember the last time I printed anything, probably over a year ago, in fact. Final couple of areas, huge focus on medtech, although people can't quite work out where the NHS is going to pivot to. A lot of stuff has been not quite thrown against the wall with the NHS, but effectively given to the NHS for free. And we'll see how much of that stuff they actually use when they have to start paying for it. NHSX is doing a huge amount of work, and they're very much looking at pivoting the whole health service from being a reactive medical intervention facilitator to being a proactive based on things like your own smart devices. So if I then look and try and answer the question around funding, we've continued to be very, very active. We put a huge amount of money, something like 14.5.
Just a question for you on that, and the role of banks in this, and particularly HSBC, obviously. Obviously there's businesses, certainly when they reach a critical size, they're probably more likely to be in the market for debt funding, in addition to, equity funding. How does that look to you? What type of businesses do you do business with? Is there a different profile in terms of organizations that avail of debt funding, perhaps more active in traditional markets rather than fast growth tech markets, or how does it look?
Well, if I start by just saying sort of the UK market approach to high growth businesses is probably different to the US. The US is, own the market and we'll worry about making profit later. And I'm somewhat paraphrasing. The UK is still very much about, let's get a product out there, let's sell it, let's make some profits, and then let's grow off the back of that. So, we are a very traditional lender. We believe that debt should be given to businesses that are able to pay it back, or provided and supporting businesses that can pay it back. Because quite frankly, lending to a business, in my opinion, that can't service it and can't pay it back is not only really, really bad for a bank, but it's even worse for the recipient on the other end. So we very much look at businesses that have got strong, proven cash flows, recurring revenue streams, high margins, and tech is fantastic at this. I mean, I'm 4 years into HSBC, and I spent a lot of time when I arrived here educating my seniors that old world businesses that might have had assets were great because you had assets, but they didn't have forward visibility, they didn't have high margins, didn't have high cash conversion. Whereas you look at a tech business, it's got all of those things, and they're unique in being able to pretty much say, well, I know what this year's numbers look like sitting here in January. I can tell you what my numbers are pretty much going to be in December. And that's fantastic. And we're also seeing a lot of M&A activity in tech. So both businesses buying into the UK and businesses from the UK buying out other assets in Europe, the US, and the Far East. So actually, tech is a great story for the UK economy, and long may it continue to be that.
Davey, I had a conversation yesterday, which will be streamed in this session with Mike Jackson of Tech Nation, and he indicated that the next big focus area, to some extent driven by the World Economic Forum and the Bill and Melinda Gates Foundation, is net zero as the next big focus and the next big revenue opportunity. Obviously, this is somewhat controversial because it used to be we allowed capitalism to do its thing, but now capitalism seems to have to operate within these parameters. Is it your view, however, that net zero is going to be all that Bill Gates wants it to be?
So I think we're sort of tying that into ESG, sort of your environmental, social, and governance regime, I think, which is probably what's most referred to here. ESG at the minute is everywhere, and it doesn't matter what stage you're at as a business. Investors it's the first thing they ask. So whether it's a BlackRock that's investing into a really advanced stage business, or whether it's a VC that's looking to invest, for a Series A, how that tech business, and it's not just tech clearly, but how that tech business is actually dealing with ESG and is looking at sustainability, is looking at their structuring, their social impact, diversity, everything else. It is really a big thing at the minute. I don't think I've been on a transaction in the last year where it hasn't come up. And it's something that's, there's an opportunity for tech within that, because obviously tech can, find ways of helping companies to satisfy the ESG requirements that are out there at the moment. But then the other way to look at it is, what those tech companies themselves have got to think about. So anything where you've got social platforms, etc., you've got to think about the protections that need to be afforded to the users of that platform, etc. So net zero ESG is a major thing. It's not going to go away. If anything, I think 2021 is going to be a year where we have to sort of get into line and ensure that we are following, because the truth be told, if a company's wanting to get investment and they haven't thought about ESG, you talked about earlier about the competition for early stage money, etc. They're going to get further down that list unless ESG is somewhere on that agenda and somewhere in that pitch deck.
Ben, any comments on this?
Yeah, I would agree with that. There's a big force behind climate change initiatives and ESG. It's coming from government. It's coming from parts of society. Businesses have to be ready for this. It's here. The force is increasing, and I think the investors are saying to themselves, "Look, to mitigate risk, our portfolio companies have to be equipped for this. It's a risk issue. If the regulations increase, they need to be ready for it." So you're right. It has to be part of the investment proposition. Yes.
Yeah, it's interesting that one of the fastest growing employment categories is compliance officers. It's ironic that we're apparently deregulating everywhere, and then suddenly we have been sort of shot on from a height as far as regulations are concerned over the last year.
Yeah, one of the hottest areas of technology is Regtech. I meet companies every day in this space. It's quite remarkable how many I'm meeting, and they're doing very, very well. The big corporates are, having to adapt to compliance, neat requirements, GDPR, etc. It's a big pain in the neck. Mm-hmm. And there's all kinds of startups that are taking that problem away or relieving some of the pain.
Yeah, it certainly is a category in its own right, isn't it, Regtech? And it's interesting too that there might be opportunities there for alternative different platforms and data platforms, and there is an obvious role for blockchain technologies. Just a final note on blockchain. There's rumors that Coinbase is going to be IPOing. I mentioned yesterday in a conversation that Tesla in the last year made over $1 billion in terms of Bitcoin gains. What's going to happen in terms of, Roland, one for you, fiat currencies versus crypto? Are we going to see more crypto plays happening? Not necessarily fintech plays, but blockchain-enabled technologies emerging, or distributed ledger technologies. What's your view?
So it's interesting because this links back to the point that we were just talking about on sustainability, because certainly the blockchain or crypto gets a bad reputation for the amount of power it uses, and I think there is a piece there more widely that the tech sector gets perceived to be a societal or a sustainability bad, when actually a data center is much more efficient per unit of compute power than lots of people having servers under their stairs. So I think there is a bit the economy needs to do there. I mean, in terms of distributed ledger, I mean, we use it a lot of industries are using it. I think distributed ledger is going to probably find its feet outside of financial services, maybe in terms of asset tracking, think about meats or foods or component parts. I think that's a massive area. I think the fact that central governments are starting to think more seriously about their own form of digital currency, I think that's a really interesting trend. The kind of the blockchain and the crypto assets have got a bit of a bad reputation. Is it a Ponzi scheme? Who knows? Only time will tell. And then it needs to transition away from that perspective to a lot of the good stuff that the DLT and the distributed ledger can provide. And I think that will happen over a period of time as governments start to more seriously look at their own effectively digital currencies.
David?
Yeah, absolutely agree with that. I mean, it's been interesting again, the uptick in the last 6 months with crypto companies coming to chat to us and talk about actually listings here in the UK. The problem is, as Roland said, I think Bitcoin and the bad rep it had at the beginning suddenly became associated with blockchain, and everyone thought blockchain was a bad thing, which of course it's not. I think the FCA here are still ruminating on how they're going to deal with the regulation around crypto. They are getting there. I don't think it's going to actually be that long until we see some regulations coming through which enable this area to move forward. And there are activities taking place at the minute in and around the capital markets where some really interesting crypto funds and companies who are nothing to do with Bitcoin, and I mean that in a good way, are actually going to probably move us forward, and actually we'll have a very different view, I think, in a year or two's time on currency and how we buy things and how we spend. So I do think that, actually that's an area over the next 12 to 24 months we're going to see a real surge, and actually the regulations are going to have to catch up, because what we can't have is certain countries have got regulations, but a lot of these crypto companies don't want to go near those particular countries because their regulator isn't, let's be honest, the gold standard. So if you've got something that the FCA has ticked the box on, that it's going to be taken more seriously, perhaps. So I think there's a bit of work to do from the government side. Be interesting to see with Brexit whether things like that get moved forward at pace. At the moment, we are going through quite a big review of our listing rules here, which is, as a capital markets lawyer, I'm very interested in, to try and make the UK a more attractive proposition for big tech. In other words, let's list in London, let's not necessarily go to the US. So there's a lot of change coming. I just hope that it's change that's sensible, thoughtful, keeps the gold standard, but also enables us perhaps to be a little bit more flexible and to be more entrepreneurial as a country in terms of how we take things forward.
Ben, any final comments on this?
Oh my goodness. I think these guys have covered the crypto stuff pretty well as far as I'm concerned. But blockchain is not just about crypto, it's about applications for enterprises, tracking and tracing, managing goods all over the world, managing transactions everywhere. There's all kinds of interesting applications coming out. But I think what's really interesting is at the moment it's quite complex for enterprises to deploy blockchain. And I think there's a big opportunity for software platforms to come in and make that easier for them.
Yeah.
Because I don't think blockchain is going away, it's going to grow. But what we really need is sort of a Microsoft for blockchain. Yeah.
Absolutely. Well, listen, guys, it's been fascinating. We've covered a lot of ground. I told you at the start of this conversation, it flies in, and we covered a lot. And I really do appreciate you joining me, and I'm sure the viewers will as well. So it only remains for me to say thank you very much indeed.
Thank you.
Thank you.